Techtronic Industries are a battery-powered tool manufacturer based out of Hong Kong. Founded in 1985, Techtronic Industries started life as an OEM for Western-branded power tool companies. However, they quickly pivoted to become a fully vertically integrated brand owner and manufacturer of power tools. Techtronic Industry manufactures and markets two key flagship brands. The first one, Ryobi. Ryobi will be familiar to many of our listeners, as it exists in a whole lot of garden sheds all throughout New Zealand and Australia, with its dark green branding. Ryobi targets that DIY customer. The second flagship brand is Milwaukee. With its distinct red branding, Milwaukee targets tradespeople through to specialist contractors with a highly specialized tool that carries out specific use cases. In addition to Milwaukee and Ryobi, Techtronic operate a number of smaller home brands, as well as operating a smaller floor care and cleaning segment. Techtronic's history is entrenched in battery technology. The company is driving what we consider a generational shift away from corded tools, being electric, gas, to battery-powered tools. Techtronic's founder-led mentality, noting that the founders still own 24% of the company, has led to long-term decisions and a longer-term capital allocation framework versus their peers. An example of Techtronic's long-term thinking is their investment into research and development. We see peers and competition focusing on short-term margins, quarterly earnings reports, whereas Techtronic have driven market share gains and outsized growth via reinvestment into research and development. Further, Techtronic tend to prioritize this research and development spend when the market is working against them. Whereas peers, the first thing they tend to cut is research and development when economic conditions worsen. However, it's not the absolute level of R&D spend that we're concerned about. It's the value created from that spend. 30% of Techtronic sales each year come from new product development. Techtronic continue to push the envelope in terms of those specific use cases and those tools that they can convert from being a corded product to a battery product. It is this type of thinking that we believe drives a long-term competitive advantage that is incredibly difficult to disrupt or displace. The first would be safety. A quick example would be the fact that there are less trip hazards around a site. Efficiencies. Contractors spend much less time setting up their tools and getting ready to carry out that task. Reduced maintenance costs across the life of the tool. It's a much less sophisticated product than a corded tool which has engines, oils, etc. that all need to be maintained. Reduced noise pollution. This means that contractors can start earlier and finish later, given that battery-powered tools make much less noise. And then, of course, reduced emissions. Battery-powered tools are much better for the environment than their corded peers. We've been following the company for an extended period of time. However, it is only recently that we've decided to initiate or take a position in the company. We saw an opportunity post the sell-off, given the CEO's departure from the business. Now, the CEO's departure from the business shocked the market somewhat, but we felt the sell-off was overdone, especially when you put it in the context of the fact that the replacement was named as Steve Reichman. We feel like Steve Reichman is a steady pair of hands. He has been driving the Milwaukee brand, which has been cornerstone to this investment case. Although it's early days in terms of our ownership of the business, pleasingly, the stock is re-rated since we first purchased the name. And we continue to get excited by the underlying momentum within the business. Despite Techtronic's impressive track record in compounding shareholder capital, we see ample growth opportunity in front of the business as they drive this generational shift from corded products to battery-powered tools. We remain confident in management's double-digit growth rate target for the Milwaukee brand as they launch new products, expand their TAM, and grow outside their core markets of the US and places like Europe. DIY demand and Ryobi demand has been impacted by the higher interest rate environment. However, longer term, we remain extremely confident in the brand power of Ryobi and its ability to return to growth as we enter a lower interest rate environment.